All right. Well, I am Joshua Phillips with Churchill Mortgage, and I am here with a special guest today, my brother.
Very special guest.
Very special guest, my brother, Micah. Micah Phillips, same last name, a.k.a. the Goodlettsville guy. We'll talk about that maybe a little bit later. But I'm already noticing that, Micah has a taller microphone than I do because he is a much taller person, got taller genes
Genetics.
than me. Exactly. So anyway, well, good to have you here. Been looking forward to doing a little interview with you.
I have been looking forward to being here on your show since last week when you asked me.
Since last week, lots of prep work.
Yeah.
Well, cool. Well, so you didn't start out in real estate like so many people. I didn't start out in the mortgage business.
I don't have a real estate degree.
Don't have a real estate degree, nor does one exist, I don't think. So
There's a couple colleges that have a real estate degree.
anyway, but so tell everybody just a little bit about like how you got into real estate.
So I went to Lipscomb University, go Bisons,
Go Bisons.
and have a degree in social work, and thought I might follow our mom's footsteps, maybe into counseling or therapy, and got a social work degree. Did that for 6 years, working with kids, mostly at-risk youth, case manager for 6 years. And by the end of that 6 years, we were in the middle of a home renovation. I'd worked my way up to a huge salary of $23,000 a year.
Wow.
After 6 years. And we had a baby. We had a baby on the way. And it was just like this. While I enjoy working with kids and I'm using my degree, it's like I've got to do something that brings in a little more income. So yeah, we right in the middle, we had all nice insurance and all this stuff. We had a baby on the way. And I was like, even still, I've got to quit this job and go make more money. So got into real estate, got my license in 2006, and so January will be 20 years for me, and 5 years at Keller Williams and 15 years at Benchmark Realty. So I've been doing that for quite a long time. You look back, it's like, how did I end up doing this for 20 years? It just flies by. So it's been...
So that's quite a long time, and like all of us have lived here a long time, you've seen a lot happen in real estate. So when you look back, how do you see Nashville's market develop over the last 20 years?
Well, we bought into our first home was in East Nashville. That was 2001. We got a house for $96,000 in Laughlin Springs, which everything there is like over $1 million now. Like any home that 1,500 square feet and up, $1 million. And we felt like we overpaid at 96. I mean, and we really did. So just, we've seen dramatic increases in areas like Sylvan Park, Germantown, East Nashville, Laughlin Springs, and just all the ships have risen with the tide in Nashville. It's been amazing just watching. And we look back I think the numbers bear out from 2016 to 2024, we saw values double. In an 8-year span, which is incredible. That's waning a little bit right now, kind of in the more of the buyer's market, but just the influx of out-of-state people, tons of money has come in, tons of businesses have come in, and that's just helped Nashville real estate to explode over that time. And it's unsustainable. I mean, you can't like double every 8 years your value. I mean, no one's going to be able to afford a home, and everyone has to have a home. So, it's nice to see a little bit more affordability coming back into play for some buyers.
Yeah. Now, specifically, a number of years ago, I don't know, but 10 years ago, you moved to Goodlettsville?
11 years. Yeah.
11 years ago, you moved to Goodlettsville, and you kind of started branding yourself. You said, you know what, I want to really focus. While you can do real estate anywhere, in fact, you were my real estate agent with the home that we have here in Brentwood. And so you can do real estate anywhere in Middle Tennessee, but you do like to focus on Goodlettsville, and you kind of branded yourself as the Goodlettsville guy. So tell us a little bit about just Goodlettsville specifically and what that market's like.
So Goodlettsville is a huge geographical area. There's the city of Goodlettsville, which is in Davidson and Sumner counties, and then the postal service zip code. The zip code goes into Robertson County also. So it covers 3 counties. It's a huge area, beautiful area. One of the things I love most about it is the affordability compared to Nashville. So we're well off the pace as far as like Nashville average prices. It's still doing fine, but I love affordability. I love people being able to get into a home. But the area is great. The town is well run. The people that are in charge, the mayor and the commission and all that, is very good people, smart people. The people are so nice. People are great. But the physical area, the topography, the hills, the creeks, I mean, the parks, everything about it is just absolutely beautiful. So I love being up there. We have a hill all to ourselves. I mean, we have a few acres, and in the summertime when the leaves are on the trees, we can't see a single neighbor, which we love the privacy, and you can get that in Goodlettsville like you can't get in a lot of places. So that's one of the perks for us.
Yeah. Well, there's a shout out for the Goodlettsville market. So
it's inventory's up like it is everywhere. Like it hasn't been in a long time. So it is more affordable. People do think, it's 15 miles out of Nashville. It's probably pretty close to free. And it's like, no, your expectations aren't quite right. They think, if I get out to Goodlettsville, I can get whatever I want. And that's still not the case, but it is a lot more affordable than most areas in Middle Tennessee.
Can you still find a starter home for $300,000 to $400,000?
Definitely. So there's a lot of new construction. So that'll be a smaller home. It'll be new construction for the most part, or one of the smaller, like in town, like kind of downtown. There's not much of a downtown Goodlettsville, but one of the older homes, smaller homes in Goodlettsville, you can definitely get $350,000 to $400,000 for sure. And new construction, quite a bit of it, mostly in Robertson County, a little further out, under $400,000 with no problem.
Gotcha. And that's a great, these days, that's a starter home. There are no $100,000
wild
homes. Like when we bought our first house was $85,000 back about close to 30 years ago. So we've seen the real estate values go up tremendously. I think obviously you've lived here now for over 30 years as I have, and being in real estate for 20 years, you do have that wealth of knowledge about different areas of town and what's happening. And I think that's part of the value that you can bring, as a real estate agent. So talk to me briefly just about like the last 5 years. It's been a crazy roller coaster here in Nashville, from the insanely low interest rates to rates going higher and homes just flying off the market to sitting there.
Yeah. And let me go back and say, most of my work is outside of Goodlettsville. So I've gotten in some trouble. Like I talked to a buyer last week, and they're like, they want to look at a home in Hendersonville and Springfield, which is right in my area. And like, do you show houses outside of Goodlettsville? I'm like, yes. Most of my work is outside of Goodlettsville. I'm based in Goodlettsville. I've been doing that kind of moniker, the Goodlettsville guy, since 2019. So I've lost a little bit of it. Like, we didn't know you did anything outside of Goodlettsville. And it's like, yeah, most of my stuff is outside Goodlettsville. So I do travel.
Yeah.
I love working in Goodlettsville. But yeah, in the last 5 years, so during COVID, a lot of this stuff is just like inexplicable. Like, why did all this happen? But I mean, you saw values go up. I don't even know the numbers, but it felt like 30 to 40%. Like during COVID, when people are supposed to be shut down, and realtors are essential workers because we're working housing. It's essential workers in quotes. I don't actually mean that, but everyone wants to move. Everyone wants to buy a house. You have states shutting down, California, New York, just shutting down. And people are like, no, I want to live my life. And they're moving to Tennessee like crazy, in Florida and North Carolina. So just absolutely drove up prices like crazy. This is 2021, the first half of 22. And it's so unfair to like local Nashville buyers because we just don't have that much money, but people are coming from these other states, driving up our prices. We can't compete. So you got to buy. I've got a local buyer, and it's like we have to go make 6 or 7 offers before we find one that we can win. And
back then you had to offer like $30,000-$50,000 over the list price.
It's crazy. I mean, and you said, I don't care what it appraises for. I know I'm overpaying for this house, but I want to live somewhere. It's like I want to move, or I want my first house. And so you didn't even care. Everybody wrote in, if it doesn't appraise, which it's not going to, we'll cover the shortfall. I'm sure you saw that in all the contracts.
Sure.
I'm sure it made things very interesting on the mortgage side. But then all of a sudden, rates go up in 22.
Rates really shot up in 22. Yeah.
Yeah. So that slowed everything down, and inventory went to like an all-time low because you've got everyone wants to hang on to their 3% rate. Nobody wants to sell. So I mentioned inventory in Goodlettsville right now. So as of like last week, there are about 140 available homes in, I think Goodlettsville is maybe 94 square miles. It's a big area. So 140 homes available right now today. You can go write an offer on. At that time, it got down. I think the lowest I saw was about 10 or 11 homes available, active.
Wow.
So in a 94 square mile area, there were like 10 homes that were available. So, and the prices on those are just through the roof, way overpriced, and they're probably getting it. But, as the rates went up, less people are buying. People want that money, so they like put their home on the market, and inventory just crept up. And now it's like, if you're a buyer, you go out, you've got a lot of homes to choose from. You have sellers that are willing to offer concessions. They'll pay your closing costs. They'll negotiate the price. Everyone's reducing. I saw you had a post about that recently. I forget the number.
Yeah.
1 in 5 was
1 in 7, I think.
1 in 7.
Yeah.
So reductions everywhere. Sellers have a mindset from the COVID times. I can just put this huge price on my house and get it, and it's not realistic. So they're putting it on at these, and they'll find an agent. I mean, I passed up a listing recently and found out, they're about $1 million, not $1.5 million, about $150,000 overpriced. It's like, you just have, it's invisible. Like, got the wrong mindset. I can get whatever I want for my house. No, that's not the case. They're going to have to reduce, and it's going to take them a long time to sell because there's just not the demand that there was. So
I don't even hardly remember what a normal market is like because we've gone from like one extreme now potentially to the other extreme. So what do you think, just from your perspective, and I can share a little bit myself about 2026, like what do you think 2026 will look like?
2026 is, here's exactly what's going to happen in 2026. So for the last 2 years, 2024 and 2025, we've seen this pent up demand, like buyers just aren't buying. I mentioned last week I went to a class and the teacher said, it's kind of funny. It's a buyer's market without any buyers. So it's like conditions are great for buying, but no one's buying. And I guess the rate's probably still the only thing holding people back. There's no election coming up, and it's like conditions are perfect for buying, but no one's. It's slow. So we really expected 2025 to be brisk sales. To catch up. I think 2024 was like 1 million sales. We expected this year to be like 1.4 million, and it's just not happened. It's like, it's been, for me, slower than 2024 was. So it feels like there's like this water building up behind a dam, and it's like at some point it's gonna break and kind of break back toward the sellers because you have all these people that just aren't buying, and at some point it has to happen. So people need to be buying houses, just for even net worth, like long-term wealth creation, expanding their families, having families and all that stuff. So it needs to happen, and it just hasn't happened the last 2 years. So I'm optimistic that 2026 is that year when we see things kind of break through. So whether it happens or not, I'm not.
Who knows? We can't. It's impossible to predict the market, but certainly right now, and I think maybe 2026 may be moving back toward a normalized market, finally, where home prices are just going up a little bit, and buyers and sellers are finding a reasonable negotiated price. I think rates are, they've come down. 2023 we probably hit a peak at 7.5% to 8%, and now we're in the low 6s, even high 5s, I made a video last time we made videos that assessed like what's an actual like normal interest rate. And I looked at my whole career, which is 27 years. And ChatGPT said, I think it was 6.2. And then I said, well, over 40 years, 5.7. So somewhere around 6% is a normal interest rate. And after these wild extremes, maybe, and I just think we're not going to see much change in interest rates. They may just kind of flatten out 5.5 to 6.
Yeah.
And that just may be the norm going forward. And eventually people will just have to get used to that.
Yeah. And we thought going through 2024, people were finally getting accustomed to the fact we're not going to get back down to 3%. It's like we were extremely spoiled.
And it was caused by a pandemic, which we don't want to have again, nor would I think the government do the same thing they did last time, because as great as it was to get those 3% interest rates, it really wreaked havoc on the market.
Yeah, and I'm not an economist, but from what I have heard and been taught, it would probably take a recession for us to get those rates back down significantly. And that's like the last thing we want either. We don't want the whole U.S. economy suffering just so we can get a 4.5% rate.
Yeah.
Because at that point, people don't have jobs and the incomes are down. It's like we don't want that.
Yeah.
Either, as much as we do want the rates to go down. I mean, I would love for rates to go down and people to get off the fence and buy a house.
Well, like you said, right now I think it's a great time. It's the best time it's been in the last several years to buy a home.
I would say 15 years.
In the last many years, it's a great time to be a home buyer. You've got prices coming down a little bit. Mortgage rates are reasonable. You can get the seller to pay closing costs. You can get the seller to do something like a 2-1 buy down, which I love to do, where they get a 2% lower rate the first year and 1% lower rate the second year. So you really can get a very reasonable rate for at least the first couple of years to help you kind of ease into the mortgage payment. So there's lots of opportunity. Well, Micah has been doing, actually with my son Jesse, Micah and Jesse have been doing some homebuyer workshops, first-time homebuyer workshops. I still, people use Google searches and ChatGPT and whatever, but I still think there's nothing that's better than sitting down in a class for a couple hours and just really getting educated about what it takes from buying the real estate to the mortgage side. I think they do a great job doing 90 to 120 minute homebuyer workshop.
Been about 2 hours. We need to shave a little.
So yeah. So we're going to encourage you. If you haven't been to one of those and you're watching this video, reach out to Micah or Jesse or myself and get into a homebuyer class. It's never too soon, in my opinion, to start a conversation about buying a home, even if you're 6 to 12 months out. I think that's the perfect time to start a conversation. With Micah about, where you want to live, what kind of home you want to be in, things like that. And with 20 years of doing this, you're in great hands.
Well, one thing I've encouraged, and I've set up several buyers from those classes on, is auto notifications. Like, let's say you're going to buy in the next 12 to 18 months. It's like, okay, what area do you want to buy in and what price point? And so I set someone up last week on under 500,000, and we just plugged in zip codes. And once a week, he and his wife will be getting an email says, these are the listings that came up this week. So you start to educate yourself on, you're not going out looking at houses, but you're like, okay, so at this price point in this zip code, I can maybe get 3 bedrooms, 1.5 bath. I'm not going to get a 4,000 square foot house. But just to start that education. So you as a buyer need to know when the right house hits and a good deal hits, like that's when I need to jump on. So it's never too early to do that. I love working with first-time buyers. I have done some higher, more luxury homes, but a lot of what I do is first-time buyers, resale, or downsizing. 400,000 to 600,000 range. There are some agents and that's great for them. It's like, oh, I won't come out for under $1 million.
Yeah.
I've never. That would be great. I would not mind working in that price point all the time. But I love working, whatever the price range and however long it takes. I think my record is probably 6 or 7 years working with someone that I had helped them buy a house or two. I can't remember, but I would show them houses every once in a while, maybe once a month for like 6 or 7 years till the right one came along. So not recommended, not my most favorite thing to do, but I'll do, however long it takes.
Yeah. Well, and let me wrap it up by saying this. So, and I say this a lot. I do market update videos, and I do, my son Jesse and my wife Amy. We're all at Churchill Mortgage, and then Micah Phillips is a real estate agent. So we're all kind of there's a lot of us in our family in real estate, and I just want to say, as a family, as a Phillips. We are here to serve other people. That's just part of our family DNA. We're Christians. We want to be honest. We're not here to push anybody to do anything they shouldn't do.
teach.
We love to
Love to
teach.
educate.
We love to educate. And I do believe when you're working with the Phillips, I believe you're in good hands. We're going to take great care of you. So anyway, it's great to talk with you. And,
Thank you for having me.
I know. I'm Joshua Phillips, Churchill Mortgage, Micah Phillips with Benchmark Realty, a.k.a. the Goodlettsville guy, who also does real estate all over Middle Tennessee.
Anywhere. I'll travel
Anywhere.
East Tennessee, West. My license covers the entire state.
There you go. All right. Well, y'all take care. Bye.